So today in this video, I'm going to give you the exact detailed behavior that I look to use each and every single day to get in and out of the market. I don't want to give you guys any fluff, and I don't want to waste your time. I want to give you guys the tools, the applications that you can use so that you can implement this system and start trading it come Monday and start to get good results in the market. If you're anything like I used to be, I used to struggle day in and day out. And it wasn't necessarily because I didn't know how to trade or because I was stupid or dumb or inexperienced. It was more or less the main primary issue that, in my opinion, cost most retail traders their consistency is that I wasn't sticking to one approach. Okay, I was getting into the market in all these different ways, and there was no consistency to my approach. Therefore, there was no consistency to my output. Okay, so over here at High Performance Trader, we are all about putting in consistent behavior and getting out consistent results. Your system has got you where you are today. All right, it might be a good system and you might be getting good results, or it might be a bad system. Even no system is a bad system and it's giving you not good results. Okay, so in this video, I want to show you the system I use, how I actually use it, so that I know, hey, when I see this specific chart pattern right here, I'm going to enter into the market short and we're going to end up clearing over X amount of percent return. Okay, and to really give you guys a better understanding, I want to give you guys the pre-market plan just so you can see like a top-down approach of how we actually approach trading every single day. So October 9, 2025, pre-market plan, critical level of interest is previous day high and end of day. So if I pull up this chart, remember guys, it's all about having a consistent approach. So every single day I do the exact same things. I identify my pre-market plan. Now what that is a real general, okay, it's not super specific, but it's a general understanding of if buyers show up to the market, I'm looking to target this, and if sellers show up to the market, I'm looking to target this. And it's all based off critical level. All right, critical level. So let me just give you guys a little history on why I call it a critical level. So I studied physics for a very long time, and in physics there's a law called critical point analysis, and basically what it is it's the critical point where it's either good or bad, it's either hot or cold, it's either up or down, right? It's a reference point. A critical point is relative, okay, to the outcome. All right, let me say that one more time. The critical point, for you to identify it, you must have the outcomes in mind. Okay, that way you can actually term what's critical, right? If you don't have an upside target or a downside target, you're not going to be able to identify the critical point, okay? If you don't have the goal in mind, you're not going to understand what's critical, all right? So once again, top-down approach, this is very important. So when I'm identifying my pre-market plan, I'm doing what I like to call critical point analysis, where I'm going, okay, if buyers or seller, right? If buyers can hold, right? Because the critical point was previous day high and end of day. So basically what this looked like is whoever can control this level, I was going to trade with. I was either going to go up or I was either going to go down. All right. And study shows whoever controls the level with the most volume tends to be dominant that day in the market. So bullish scenario, I'm looking for buyers to hold the EMA cloud, the 20 specifically, okay, in pre-market. This morning, I'll be looking to trade off open print, the PDH end of day sweet spot for buying acceptance. What does this mean? This means I want to see strong buying, okay? I want to see moving averages being respected, all right? I want to see areas of value, RBIs, GBIs, the whole thing, all right? Looking to trade in the pre-market. Now, bearish scenario. Watching for sellers to take control of the 1 hour time frame with bearish structure off open print in the sweet spot. The sweet spot is that end of day and previous day high level. I will play HPT crossover criteria to the downside. Okay, what's HPT crossover criteria? Our strategy. All right, so if you click the link below, it's going to bring you to my website. My website, I'm going to give you the mini course. I'm going to give you the details. I'm going to give you the understanding of our strategy. It's a 3-step approach that's going to get you in and out of the market very easy. All right. Now, today is a perfect example of this strategy. So make sure you pay attention to this video. Number 1, identify the critical level. Number 2, identify the moving average cross. Number 3, the RBI, GBI. All right. This is the approach that we've been trading for over a year, and we're currently sitting here at a 79% win rate. Okay, so once again, if you want more information, if you want all the detailed high-level summaries, the data reports on this strategy, put your first, last name, email in. and I will send them to you immediately. Okay, so now let's break into the market and what we're looking at. So once again, I'm just going to highlight previous day high, which is right here, and then end of day, which is right, or I'm sorry, that is end of, there's previous day high, there's end of day. This, guys, remember, is what we termed the critical point. Whoever can hold this level, and it's not just hold the level, it's how they hold the level. All right, now this is where the details come in. And these are the details that you're going to really want to pay attention to, because they're the details that are going to get you in and out of the market exactly where you're supposed to. Okay, so this is the level we want to watch. That's previous day high, that's end of day. So now the market opens, and remember, this is all-time high right here. We're literally trading into all-time high. This is uncharted territory. So anytime you're in all-time high territory, right, you really need to rely on your moving averages. Okay, just like critical points and critical levels, moving averages are a reference point. Okay, when you're using a moving average, remember, you're viewing it with the end goal already in mind, right? So the way I'm looking at this is, if I want to identify buyers controlling this level, okay, I'm gonna have to see healthy moving average relationship. I don't want to see extension, all right, like we got up here when price just rallied up here to the upside. I don't want to see extension. I want to see healthy price action to the downside or upside. So now going back, our three-step approach, first thing we're looking for is open print, all right, which is going to be the open bell, the 930 bell price. Okay, so now let's go back to think or swim, and we are going to identify open print. All right, 930 bell goes off, ding, ding, ding. All right, this level is very important because the volume, okay? We can't move the market, so we got to get really good at understanding what the people that can move the market are doing. All right, very, very simple philosophy we have over here. We can't move the price, so we got to get really good at understanding who's moving it and how. Okay, so open prints established, then we get that moving average cross. Then we get that RBI, that GBI at that critical level, shattering through price. Okay, so if I go back to the Discord, I want to show you guys exactly where I got into the position. So right here, October 9, 2025 at 10:16 a.m., I'm hopping in the market short. Okay, so what is it we have here on this chart? What details can I give you so that you can trade that much better come Monday morning? All right, now once again, what do we get? We got A, open print. We got a critical level right here. Now B, we have a moving average cross. Okay, so once again, we've spotted the level. Now we understand who's controlling it. Sellers are in control. Now we get some of these pretty candles. All right, these are what I call GBIs. Okay, these are very important. This is what we call a green bar that gets ignored, okay, GBI. Price sells off through it. What do you guys think is actually happening here, okay? You have buyers entering into the market, getting completely their hopes and dreams shattered, okay? These buyers are now in losing positions. This is what we call trapped buyers, okay? So when price comes back up to these levels, this is where you start to get that selling. This is very simple break and retest, okay? So now as price is making its way to the downside, I understand that sellers are in control. I want to participate, but I can't just get in because the market's extremely volatile. I'm trading SPX contracts, people trading futures. You can't just enter into a position. You need to account for your risk. So what do? We wait for these candles to be disrespected, all right, just like this one right here. It's a green bar that's ignored. And then right here, we're entering into the market short. So once again, the detailed version for you tomorrow is you're going to wait for the RBI, the GBI, okay? You're going to wait for price to show you who's in control of the critical levels, and you are going to identify entry points using RBIs and GBIs. This is exactly where I entered into the market short, and my stop loss went right above the previous candle. This way I always know where to get in, and I always know exactly where to get out. Then I drop down to the 2-minute time frame, and then I really get clear. I go, okay guys, Price is respecting that 20 EMA. Look at that, beautifully. So now, for me to stay in this position, I'm going to use the 20 EMA because I can't be ignorant, I can't be naive, and I can't just assume that sellers are going to lose the ball prior to them losing the 20. Does that make sense? Okay, like I need, once again, to use my moving averages as reference points. Okay, so I want to stay into the trade until I hit my target, which is down here at 670.55, or price breaks that moving average. Now this is a phenomenal way for you to kind of approach trading from a more broader perspective where you're not so nervous. Okay, hey, listen, I understand there's a little pullback right here, but I know this is where most traders are getting shook. I'm going to stay in the trade because the data tells me that once I see this three-step approach, there's a 79% chance that we are going to get a move all the way down to my target. All right, and that's literally exactly what we got. You can see here price started to really sell off, and we came down right into our target, which led us to lock in that 84% ROI. So let's just do a quick recap of this video so that you get all the details from it. So every single day I approach the market and pre-market identifying critical points, okay? These are the make or break levels. Remember, they are a reference point with the end already in mind, okay? And then number two, I'm looking to identify who owns the open, all right? Who owns these levels? Because if the levels are the critical point, whoever controlling them is the critical player. Then number three, I want to get into the market, but I can't just enter into the market. I need a very easy and detailed way to actually participate, and then I'm going to use my moving averages to capitalize on the move straight down to my target. Okay, I hope you guys like this video. Make sure you like it, and if you want more information, click those links below.